Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update quarterly edition, Johnny. Let's get right to it. We'll get to the quarterlies later. Hang on to your hats. I'm looking at supply Manhattan 6711. Johnny, show me that chart.
6711, Noah, is exactly what that number is. That is up 2.8% from last week, and that fits with the trend of the last month or so, which is supply is increasing.
Yeah, supply is coming on, and actually the stuff is coming on. It's actually coming on higher than what we're supposed to see when we look at October. We'll get to that in a second. Let's look at Manhattan demand pending sales on UrbanDigs 4586. Johnny, show me that chart.
So 4586, Noah, is the number, and it's down about 0.6%. So it's down, but it's almost sort of plateauing here. So we've been on sort of a downward slope since about June, July, once we sort of got into the heat of the summer. And it looks like it might be leveling off here, but look, it's 1 week. It's really too soon to tell.
Well, this is, the stuff is about to go into contract, right? So October, November is typically our wave. So I would think that the downtrend of pending sales is getting close to exhausting itself, for lack of a better word. So it'll be interesting to see if we go any lower than this. We'll follow it. But you can clearly see the market pulse at 0.68, John. This is taking into account the drop in supply. I'm sorry, the increase in supply and the drop in pending sales. I apologize for that. And when I look at that market pulse, John, I mean, that was in the mid 80s just a month ago, and we have dropped straight down. Buyers, this is what we were talking about. Wait, right? We said, wait, there's going to be a very brief window of leverage opportunity. You are in it. This is it, Johnny. So they need to pull the trigger right now. I think they have a little more leverage than they usually do. Let's go to the weeklies and let's see what's going on there. Supply, 489 things. Johnny, show me that chart.
Yeah, so you talked about a window of opportunity, and I think we're also seeing that here in the weekly supply. So we've had a wave of listing activity, which started the week of September 10th. Well, Friday, the week after Labor Day, I should say. And we've had 4 weeks now, and each week has been successively lower. So this week was about 11% lower than last week, which was 2% lower than the week before. So you talk about, as a buyer, what you want to see. You want to see the things come on the market. You want to have that choice. And yes, it's come. The inventory is still coming on. I'm not saying it's not, but it's coming on less than it was.
Yeah, so maybe we wouldn't have as much stuff as we would have thought. I mean, when I look at the 1 month for just a second, Johnny, I know we're going to go into 1 week contract signs. We're at 2270, right? And I think we're supposed to bring around 1700 in for October. So right now we're actually well above that level. But you are making a very good note that that trend is declining. So if that keeps going lower, that number is going to go lower. So we'll have to keep an eye on it. John, back to the weeklies. Contract sign 246. Show me that chart.
So again, we're talking about that opportunity window, and this is the second week in a row I think we've seen contract signs pop a little bit. We were at 5% last week. This is nearly 11% this week versus last week. So the buyers are returning. We've been in sort of a deflationary wave in terms of contract signs since the summer. I mean, since the end of when was that, July or so. So that's not surprising. But like we mentioned with pending sales, it looks like they might be sort of stabilizing here. We might be at the beginning of another uptrend.
Yeah, and again, buyers, don't be surprised if you start to see a lot of contract sign tags start to come out. I mean, that is when it happens in October and November, and we're about to start it. So I would think that this number right over here is what you want to watch. And I mean, if that number starts to go up, then what we think is going to happen is actually happening. And this market pulse is going to end up reversing course and going that way. That's why we're tracking this stuff. We're trying to give our buyers and sellers some signals on the liquidity of the markets. And, it is what it is. This is the time to do it, Johnny.
Yep.
Let's move to the quarterlies, John. We promised you guys we're going to do some quarterly looks over here. This is an interesting take, Johnny. Okay. Now, if I had to give you a summary of what to expect for the quarterly reports, you're probably going to see some slowdown in terms of pricing from quarter to quarter. Okay. So from Q2 to Q3, average sales price, median sales price, average price per square foot is going to be down a little bit, but it's going to be up year over year. Okay, so we're going down quarter to quarter, year over year. If you look at median price per square foot, okay, this is coming soon, reports, it's pretty much flat quarter to quarter, but it's going to be up year over year. So I'm wondering if the pricing cycle is exhausting itself, but this is an interesting way of looking at it that the reports aren't going to look at it, Johnny. So we're just taking every Q3 and we're ranking them.
Yep.
Right, based on each other. And we're going to rank them first on new supply. How much stuff came on the market in 2021? We came in number 2, Johnny, only behind last year's great listing resurgence. And you could just see, look how many listings, Johnny, between year 2020 and 2021. Look how many listings came on relative to everything else.
Yeah, it's pretty fascinating when you think about that market pulse chart that you were showing earlier. That was in solid seller's market territory all summer with this happening on the listing side.
Yeah, and it's just and there's not a lot of inventory right now. I mean, it's crazy when you think about how high demand had to be to absorb this kind of stuff. It's just crazy. And now let's take a look at those deal signs. Let's take a look at 2021 in terms of deal sign. Q3. This is Q3. Only Q3 comparing all the years. And by far this year we have killed it, Johnny. You can see how far ahead we are of all the other Q3s, Johnny.
Yeah, and if you were to take these contract sign numbers and subtract it from the new listings number, you would be pretty much at 0, I think. So that explains, yes, we had a ton of listings, but good Lord, look at that contract sign volume. And, we've been talking about how the contract volume has slowed down since its peak levels back in April, May. So, this red bar here, which is eclipsing all the other bars, is still less than it was back in the day.
Exactly. It's from the slowdown. It's crazy. And let's just point out where 2020 is on this chart. You can see, obviously, for obvious reasons, 2020. So we really did go from one end of the spectrum on the low end. We like to use that rubber band analogy. We went snap down and then snap back up. I mean, here's just another chart confirming it with a visual data representation. Now let's get into pricing. All right. So I think Q3, all of those sales in Q3, we put them in a nice little bucket. What is that median sales price and how does that compare to other Q3s? I mean, we're ranked 3rd. What I'll say here, John, is it could be a little misleading. I do not like median sales price as a price trend change over time. I mean, if I look at this, it looks like we're over 2015 prices, right? One may interpret that. That's why I don't like to look at median sales prices, but we're still doing it just to show you guys where we are, John.
Yeah, median sales price is much more a reflection of what happened to close at any particular time, whether it's, larger units, luxury units, smaller units. And, it's not a very linear look. It's much more of a clumpy look. We generally prefer to look at median price per square foot, which I think we're going to get to soon.
Yeah, exactly. And we just didn't want to skip this. I mean, this is just our bridge to median price per square foot, which looks like this. And this is, as Johnny said, our linear price action over time. And as you can see right over here, this makes a lot more sense now. We are still kind of below 2017. We're below 2015. We're below 2016. Guys, you know the nature of sales in our market, the nature of new developments. It always comes in late. So sometimes those peak numbers come in late, right? We're kind of at 2018 levels. I mean, we're above 2019 levels, guys, but I think that this might drop down just a little bit back to where 2018, 2019 kind of in the middle is. We're right kind of there. I mean, the difference is very, very negligible.
It is negligible. And frankly, that's a very tricky place for all market participants, whether you're a buyer, seller, or an agent, because your mileage is going to vary greatly depending on what you're bringing to market. So, these numbers, these median price per square foot numbers, as linear as they are, and as much as they sort of represent the market, we love them. But clearly some units are going to carry a much higher price per square foot than others. And, this also includes new developments. It includes, all kinds of things. So if you were in, say, a co-op studio in Midtown, if you even have a price per square foot, it's going to be a lot lower than this. And if you're in sort of a, fancy new development in, say, Tribeca or Soho, Greenwich Village, someplace where you're seeing a lot of traction, you might even see something higher than this. So again, your mileage is going to vary, but we're generally in those levels.
That is true, Johnny. This is a local market. Every building is its own little marketplace. Every unit is its own little marketplace. Thank you very much for pointing that out. And thank you very much for pulling all of that data. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. This has been your weekly Manhattan Market Update quarterly edition. Don't forget, guys, you guys got questions. We got answers. Please visit our forum down here. Other than that, have a great Friday, and we'll catch you next time.